Quinn Miller here from Employee Benefits Asia, a brand by Tenzing Pacific Services. I'm just out here walking my dog. That's him in the background right there, Mr. Duke. So for today's video, you've probably heard the expression, pay peanuts, get monkeys, or you get what you pay for. I'm going to use that as an analogy for insurance, because insurance, like anything, is no different. You typically do get what you pay for. So all insurance is a transfer of risk from yourself to the insurance company. However, insurance companies individually, they need to manage their own risk, and they do those through two separate ways. One is called community rating, and one is called experience rating. So a community rating would be pooling all of their members into one pool together, and everyone's premium goes up by the same fixed percent every year. The other, experience rating, what that is your own claims, and your renewal depends on the individual amount you've claimed. So if you don't claim much, your premium may not go up much, but if you do claim a lot, your premium can go up a lot. So when you're looking at cheap insurance, why is it cheap? One, it would have restricted coverage area. So it might be something like a Thailand only policy or a Vietnam only policy. That does you no good if you need treatment outside of the country you're in. Another way they manage their risk, or why a cheap provider is cheap, is because they have low policy limits. So sometimes I see business executives who get given insurance by their company without really any real knowledge of what they have, and what I see is they're massively underinsured. So they're having an insurance policy with an annual limit of $10,000 or $20,000 or $50,000. So insurance companies limit the risk by having low benefit limits. The next is they simply are not good at paying claims. If a price is cheap and they're offering benefits galore, what does that tell you? It probably means they have a lot of exclusions and they're very good at not paying claims, which would cause you, yourself, your family, or your company user headaches throughout the year. The next way they manage their risk is if you become a liability to them, they can get rid of you at the renewal date, or they can change your benefits. So I'm not going to name any names of providers here in Vietnam or in Thailand, but local providers do not offer guaranteed renewability. So that means if you are a liability to them, such as a case where you get cancer, they can simply get rid of you at the renewal date. They're not obligated to offer you a renewal at all. Now, some providers have guaranteed renewability, but they have the option to change your benefits or implement a copay or reduce the benefits that you have for a specific condition. So let's say you have a policy that the annual limit is $100,000 and you have a $30,000 claim for cancer. At the renewal date, they have the ability to say, hey, that cancer policy that used to be covered up to $100,000 US, now we're going to put a 30% copay on the policy, and we're going to restrict the limit for cancer and any future cancer treatments from that 100,000 all the way down to 5,000. So what you don't want to do is get on one of these cheap providers and then have something happen to you, and then you realize it when it's too late. Because then when you try to change to a tier 2 or tier 1 insurer, you have a pre-existing condition that can be very hard, if not impossible, to get covered. So why are cheap providers cheap? The long and the short of it is they're very good at not paying claims. They have lots of policy exclusions. They have rules in place that they can mitigate their risk if you become a liability to them by either not offering you a policy renewal at all, reducing your benefits, forcing you into a copay or a deductible, or simply they could just massively increase your price. So if you claim 300% of your premium that you paid last year, they would have lost money. These are for-profit private companies. The goal of any for-profit private company is to make money. So if you are a liability to them, they can implement these things to reduce their liability or to recoup that money back from you. So that could include a massive premium increase, where you're looking at 100%, 200%, 300% premium increases with some of these cheap local providers, if they offer you renewal at all. Now, on the flip side to that is the community rated providers. Yes, they do cost more, but they are much safer long term, and they cannot implement any of these sorts of things to you or to yourself or to your family or to your company. They can't kick you off the plan. All they can do is raise the rates by the same fixed amount that they raise everyone's rates, because they've pooled everyone's risk into one group or a community. So I hope that was valuable to you in helping you understand why cheap providers are cheap for a reason. Dookie here looks like he's digging for crabs, so it's my time to go. If you're looking for insurance in Vietnam or anywhere in Southeast Asia, whether it's as an individual, a couple, a family, or a group, please get in touch with me today. My contact details are in the bio of my YouTube, or in the details of the YouTube description, or on this post on LinkedIn. I hope you've enjoyed this video and learned something new, and have a good day ahead.